Welcome to another day in the Matrix. This is Red Pill Podcast 160, and this one will be dedicated to the Jupiter-Uranus conjunction in Taurus, which we've been talking about for the past couple weeks, and went over this with Sama Practical Astrology in the recent podcast that we did together. Definitely check that out if you haven't already. I have reposted the full version over here in Patreon and in our Discord. So we have a lot to talk about because of the way the stock market is trading into this upcoming week, and we are about a week and some change away from the next FOMC meeting, which will be opening up the month of May. Very important month during a presidential election year, as well as the Year of the Dragon. So I have a lot of gems to be dropped today in this podcast. So let's just jump straight into it. But first things first, get relaxed, get comfortable, grab yourself a cup of coffee or tea if it's the morning time, or a glass of wine or maybe some beer if it's a little bit later out there. I myself am drinking some chai. Absolutely delicious. I've been back on my chai kick lately. I hope you guys are doing amazing. And to anyone who is new to the community, welcome to the Wolfpack. It's so great to have you here with us. What a time to be in the know. And if you have yet to get access to our Discord server, just go ahead and send me a direct message over on Patreon with your Discord username, and I will reply back to you in a Patreon message with a Discord server invite. Please don't comment below in this podcast or email me or comment on any of the other posts here with your Discord username. I won't be able to help you out that way. You must DM me directly on Patreon. And also, we did great with our altcoin voting system this week, but I just wanted to remind you guys that we need to give it about 3 or 4 months in between recapping coins that we've already talked about. So there's a search function not only in Patreon, but also in Discord. And what you could do is if you're interested in an altcoin for me to review, go over to our Discord and just go in the search box and start typing out my username, WatersAbove, and you'll see me pop up, and then press enter, and then it will keep you in that search bar, and you could type in whatever project you'd like after that. And then when you press enter, it will search through the entire Discord with all the times that I ever wrote that altcoin's name out. And 95 to 99% of the time, it's usually because I'm listing it as one of the projects that we went over in a Red Pill podcast. So it's one of the most simple ways to search for the last time that I covered a particular project that you're interested in. And the only reason I say this is because what got the most votes this week was a lot of stuff that we just reviewed last month. So we need some new chart data to form. I already told you guys that I have a what I'm investing in special that I do every 2.5 to 3 months. I'll be recapping stuff like Theta Token, T-Fuel, V-Chain, H-Bar, all the projects that I'm personally invested in. There's a list of those. You could also search for that in the Discord as well. Recap yourself on this whole project that I've started. It's an ongoing series. It's at part 3 already, I believe. So I'll be doing part 4 most likely in next month. But for now, please use a search function, because if it's getting a bunch of votes, but it's a project that I just covered like 4 red pills ago, I'm not going to go over it. So just save everyone's time and use the search function. It's amazing. We are at 3 years of doing this here over at the Mastermind community. So you could only imagine we've done 160 podcasts. I've most likely gone over one of these projects before, but let's just give it at least 3 months. So 90 to 100 days of time in between going over a project again. I appreciate you, the community will appreciate you, and it will make the whole process of selecting these altcoins a lot more unique and interesting instead of just going over the same ones time and time again. But anyways, today we're going to be focusing on the stock market, and then we're going to be covering a bunch of altcoins. But the reason why I want to be focusing on the stock market is because the way that it closed this past Friday. And as you're aware, when the stock market is bringing in a bullish energy, we see a bullish energy in the crypto market. When the stock market is bringing in a bearish energy, we see a bearish momentum in the crypto market, and that's become quite obvious lately. Due to this recent correction, we've started to see the unraveling of an incredibly bullish trend that we had in the S&P and the NASDAQ, as well as the Dow Jones, all the major indices, even the Russell 2000, we'll be talking a little bit about today. But we were well prepared for this type of environment into this particular month of May that we're moving into. And we're starting to see this show itself, and I think it's important that we focus on that now because of its effect that it will have on the crypto market, which I'm sure is the main reason why a lot of you are here. But with that being said, before I move into that, we had the Bitcoin halving 2 days ago, and I was very clear with everyone that we tend to see in at least 2 out of 3 iterations off of the halving, we start to move up. And I'm not saying that we're just going to break out into new all-time highs right now, but what we're watching right now is on the day of the Bitcoin halving, there was a quick flash correction. We could see it right here when we zoom in. I'm going to turn off everything and make it nice and clean for you. So we see this candle right here, a flash correction down to around 59,600, and then it got bought back up in like a 1 hour candle. And since we've gotten some recovery, but we are now just back testing where we were right into last week's red pill. So last Sunday, we were still at around 65. And then once we opened up on Monday, the Chicago Mercantile Exchange opened, the stock market opened, everything. And we started to see this take another lower low, even lower than where it was on Saturday. Whilst the altcoins, a majority of the altcoins got hit the hardest on Saturday. They were dropping 20 to 25% on that particular day. You guys got updates of me buying new projects. I think I did about 10 new entries in different altcoins. So I started to build this venture capital bag that I've continued to talk about. I also talked about it in the last What I'm Investing in special. So you should all be well aware of this. I gave the update not only on Patreon, but as well as Discord. Now, we are starting to bounce out of this halving. I'm just going to get the halving stuff out of the way right now because it is so exoteric and everyone talks about it. That's not why you guys come here. You want to know the esoteric, and that's what we're going to focus on today. So I just want to get this Bitcoin halving mess out of the way as fast as I can so we can move on to the truth and bigger things. Now, we had this particular correction into the day of the halving plus a bounce, and that is what we've seen pretty much every single halving. We've only had 3 past halvings. So I went over this in the last video. I also went over this in the last Red Pill podcast, that 2 iterations out of 3, Bitcoin bounced really nicely off of the day of the halving, and the lowest we went ever for the rest of the cycle after that was the Bitcoin halving. Now that's only 2 out of 3 iterations, and so far this would be 3 out of 4 unless Bitcoin was to keel over and start trading below 59K. But as of now, it's only been a couple of days. This all kind of went down during the weekend where crypto is trading alone. You guys get it that this is the type of environment to not really trust because we need to see what the traditional markets will do tomorrow, 9:30-ish a.m. New York time. When the New York Stock Exchange opens, that's when a lot of this stuff comes back to reality. When the CME opens up, the Chicago Mercantile Exchange, a lot of this comes back to reality. So it seems that we are now going to be forming about $1,000 gap between where we're at now on the spot chart and where the CME chart is. I'm just letting you know as I film this, things might look very bullish, but it's just another weekend in the matrix. And what we're about to watch go down over the next week will really be the setup for what I think we'll be watching happen with this FOMC meeting. I don't want to confuse you guys too much with this now, but I just wanted to get this Bitcoin halving stuff out of the way. We have such limited data, and I don't want to, it's not in the area of predictions or promises. It's just we have such limited data. I will be reviewing specifically what happened in 2016 during that halving, because that very well could be the setup for this particular halving, given that this year right now, we have been watching Bitcoin eerily similar mimic what was going on in 2017 during that bull run. So we got that out of the way. I'll be getting into the actual TA on Bitcoin later as usual, but for now we need to step into this S&P chart because there's a lot going on here. It's important we revisit this year of the dragon analysis and what the stock market is doing at this time, because it's highly likely to continue to affect the crypto market at this time. And we've had a textbook wolf cross where the 8 crosses below the 55, and this is a time where you start to see oversold RSI. You start to see some bearish momentum and sentiment pivot. So everything that was so positive last month, I was warning you guys, look at what these billionaires are doing. They are cashing out at the top. There's clear signs and signals of an overheated market. Tons of different high-level executives, CEOs, people that are in Congress even, were de-risking. You just got to watch what big smart money is doing, and you'll be able to determine what's likely to come next. And remember, Jeff Bezos or Mark Zuckerberg, they're not allowed to just sell it all in one shot. At least from my awareness, that would trigger a lot of things with the SEC. And yeah, they're doing it the safe way, which is lots of small orders. Of course, to them, a small order is like $100 million or more, but you get what I'm saying. And I was warning about all of that throughout February. It's very fishy. This is me quoting myself effectively. It's very fishy to watch all of these big players in the game de-risking at this time. Even Jamie Dimon, I think, is something to bring up. Jamie Dimon de-risked, or I don't know if he technically took profits. I'm not sure what his investment strategy is, but let's just say he took profits on his JP Morgan position for the first time ever since being in the CEO role of JP Morgan Chase. He didn't do that during the pre-C19 timeframe. He didn't do that last year. He just did it now, and he's been in this role for quite a while. So it's just fascinating how many big players in the game were selling during this February into March timeframe. I was warning about it in pretty much every podcast, and now we're starting to see this look like a distributional top. So around a half a year ago, I mentioned the significance of late March into early April for the year of the dragon, and to expect a micro top during this time. So not a all-time high, not a cycle top, but just the first initial topping out moment of this year of the dragon. And I anticipate going into October, well, let me be very careful here, August, September, we should already be above whatever these highs are. But from now until around late May into perhaps early June, we should be in a corrective phase. So many of you have heard me say this countless times, but now that we're actually living through it and we're seeing what the stock market is doing right now in front of our eyes, it's important to see how accurate this has been so far, which means we need to take this pattern seriously for the remainder of this year if we want to have the smoothest experience with this bull run. This is what will keep us navigating this whole thing calmly and effectively, whilst most are confused and falling for narratives, as they have been. 1 second, just going to take a sip of this chai, and then we'll continue on with this analysis. And also, I hope you guys are enjoying this lightning speed take on what's been going on over the past couple weeks and months. Appreciate every single one of you. One moment. All right, chai is life. So we have clearly started to see a little bit of a correction as of lately. We have these two yellow lines across the screen. The significance of these two lines is that those were the entry levels when we had Chinese New Year. So it's normal during the year of the dragon that we return back to where we started on Chinese New Year. And we at least see a correction to those levels minimum. And I mentioned that it is not a target per se, but just a conservative pullback zone that we see in every iteration of the 12-year cycle. Again, not WatersAbove's opinion. It's just what we've realized is the cyclical pattern on every 12-year cycle. And it's different depending on the sign. If it's the year of the horse, it's different than the year of the dog. It's different than the year of the dragon. which we're in now. So here we are. And the S&P has traded through this zone, and we've also gotten a daily close lower. So if you look at where this daily close is right here on February 21st, we've gotten slightly higher than it. But if we were to start closing lower than that level, which we effectively kissed, that would be showing some struggle. We have this daily close right here on February 2nd and a little bit of sideways for about 3 weeks off of this pivot here on February 21st. And then we kept it moving, and we were behaving, we were keeping up with this parallel channel for some time. So this parallel channel was in play for 153 days. It's madness. So the fact that we're breaking out of this channel is one sign of a larger correction is due. And the next thing is we have these horizontal levels. And I suspect if we were to start closing dailies below 4,950, that would signal further continuation of the downside. And I'll check in on that a little bit later. Let me turn off all these moving averages because it's not as important for right now. But I do want to mention that the last time, one moment. So I need to pull up the weekly because this is big. This is pretty alarming. We had a 3.05% correction on this weekly close. So a 3% correction. Now, the biggest red candle we've had, this is the biggest red candle we've had since March 10th, since the week of the retail banking black swan. You guys have heard me say this a million times. The Silicon Valley Bank collapse. So that was the last red weekly close that has been as big or bigger than the one we've just recently had. That is wild to watch. So we've just recently had that. And you could see how this parallel channel was respecting perfectly. And now look at the size of the recent candles. It's bigger than the ones that we've been seeing as we've been riding up this parallel channel. Now, the next target that we would have to the downside would be naturally the prior all-time high. So we only have about 3% more between where we're trading now to retesting that level. I just want you to keep that in mind. 3% is nothing big considering we just closed about 3% down. And the time horizon for all of this is by the end of May. So if we were able to pull 3% off in a single week, imagine what we could do in the next 5 weeks. And a majority of iterations of this 12-year cycle, we see an average April into May correction of about 5 to 8% from the prior microcycle top. So if we were to take it off of the recent microcycle top and pull it about 8%, it will be retesting the prior all-time high from January 2022. So this would be nothing out of the ordinary. And if we go back to 2012, which we're going to start to do now, I'm going to pull up the daily chart, go back into the future. I'm going to zoom in. You're going to see this red line here. So we topped effectively April 2nd. Now, this is a new pattern that I want to show you guys about. So start paying attention to this because I know some of this Year of the Dragon analysis, you guys have been following along since I shared it. Who knows how many, 8 months ago or something. But this bull trap right here, I think is key to look out for. We get this bull trap into May 1st. All right. And then a bigger correction into June. And if I was to pull up the lunar cycles, you're going to see that this was the day of the June full moon, the exact day. And this was a 11% correction. I was showing you before that if we were to have about a 10 or 8% correction, we would be retesting the prior all-time highs. There's nothing out of the ordinary. If we were to go 8% full correction for the S&P, we'd just be back testing prior all-time highs. That'd be a very healthy correction, and I would anticipate a bullish recovery after that. So the market rallied off of this full moon into the September higher high, and we did not go any lower for the rest of the Year of the Dragon. So that's another thing to keep in mind. First, I want you to take note of this May bull trap, early May, correction into June. We're going to go back to the prior iteration. This one was very special because it was the dot-com bubble. So we have right here, this was when the dot-com bubble started to pop. We topped in late March. You could see that's March 24th. By the way, the highest daily close that we had for this recent microcycle in the Year of the Dragon for the stock market was March 24th. This is insane to see how some of these, it's just fascinating because some of these big players that got famous on the world stage, such as Bezos, this was like the Amazon top. It was around that time where Amazon was just starting. People were speculating on them heavy. I don't know. I just think it's kind of crazy how cyclical it all is. Of course, that was 24 years ago. March 24th, 24 years ago. This 24 number is the key number of this year. I've been talking about it a lot lately, and I will bring it up a little bit later when needed. But we have this topping out in late March, a big correction into mid-April. You could see that. But then here, remember the pattern I was telling you? We get this like May 1st bull trap, like really strange. 2 iterations in a row, we get this pump fake into May 1st, just like we had in the last iterations, the same. And then correcting into late May, right around that full moon. And then look at this double top in right there at the beginning of September. So you see a pattern here, all right? The dip that you get to buy in May, in late May, is stellar. Even in one of the worst speculative crashes we've ever had in history. Now, the reason why I wouldn't consider us similar to the dot-com bubble this time around is because we don't have a Shemitah year. This was all around the Shemitah year, and that's a separate conversation. I can't get into that now. It would take too much time. But we had our Shemitah in 2021 into 2022. We already bottomed at the very end of the Shemitah in 2022. I could show you just really quickly. Right here. This was the end of your Shemitah. It was the best buy the dip opportunity ever. Because since, what are we up, 50%? Yeah, 40%. So now we're going to go back. But you saw this bull trap into May 1st thing. I think that's really important. So if we were to have a bull trap into May 1st, that would be somewhere around the 21st, or sorry. If we were to have this bull trap into May 1st, it would be into this 18th week of the year. And then we have April 29th through May 5th is a potential time frame where we could be seeing that sort of energy. And remember, we have the FOMC meeting on May 1st. So that's kind of like, that would be really interesting if we did continue a little bit more downward in the short term, but then we got bought back up till like May 1st, and then we have the FOMC meeting, and then it's just like pull the plug, like that would be so classic if they set it up that way. Let me look at the FOMC dates and see if there's anything I could find. Oh, sorry. I would have to go. It doesn't really matter. This is something you guys could Google anyways. I just know that the next one is on May 1st. Now, and it's important for you to all know this. I'm not saying this is exactly how it would all go, but it is a pattern. And I'm just revealing it to you like I have with all the past analysis that has led us to this moment. Let's go to 1988. Year of the Dragon. We get this pump up double top, micro double top on March 21st into April 13th, April 14th, pull back into late May, like literally on the same dates. But look at this like late April and May 1st thing. So we get May 2nd, May 3rd, and then we started to keel over after that. And that's fascinating because this was a full moon. And we just kept going after, like bearish on the following new moon. That's weird, right? So there's something about this transition into Mayday. Who knows how that can go, but that very much could be what we're about to experience. I mean, effectively, it's just saying buy the dip in late May. Let's go back to 1976. Getting up into late March, early April, chop. Lots of chop, but still early June is when we get that final solid buying opportunity before bullish recovery and a new microcycle top in September. This was one of those examples where the type of chart we had was not in the same vibe as where we're currently standing, because after here we already had a huge correction. We already had a 50% correction over 2 years. So I wouldn't be getting too caught up in this structure, but it's still starting off the year of the dragon effectively the same way. topping out in late March, early April, correction into June. Let's see where we're at in the beginning of May. Okay, not as much to say here about this, but late April, this is too choppy and too awkward. But one thing that I did just notice is look at the back test. The lowest we went was the start of the Year of the Dragon. So it's something I pointed out a couple red pills ago. I'm going to go to 64. Now, this data almost looks corrupted because of the style of these candles, the way that they're looking. But nonetheless, we still have the correction into the first week of June, effectively backtesting around where we were at the start of Chinese New Year. And we were bullish in May. We made a new microcycle top in May, but yeah, it's hard to understand this type of candlestick structure. You see how weird these candlesticks look? And now here they look normal. I don't know. I guess it's because it was shifting from these dots. Who knows? I'm not going to put too much energy into this right now, but we still have the pattern. It's pretty clear. Go over to here to... I just go to 1940, the last one, and then we'll wrap up this concept. Let me turn these area on. So this one was rough, and this is a curveball. The market held on until the new moon of May 7th, and then it fell off a cliff. The initial correction bottomed on the full moon of May, which was May 21st. It chopped sideways, and then it made a new low about, 3 weeks later? Yeah, exactly 3 weeks later. Actually around this new moon of June. So that was the lowest the S&P traded that year, even during World War II. It's like a buy the dip time frame for sure. Like no matter what happens, no matter what the narrative is, it's like buy the dip in this late May, early June time frame, and you're golden. Like we went up for the rest of the year, and look into Q4. So here's September. We chopped at highs into the following eclipse season. Remember, we have eclipse season coming up in October. We just made it through eclipse season, and then we made it till November with a new high. Obviously a slightly different chart, but similar narratives going on now versus then. But even during the war, you get this big late May correction, the Year of the Dragon. Then the following year is interesting. I've recently started talking about this with you guys after so many requests, and for those that are more into the astrology side of things and want to know what my take is on it all. We have this particular year of 1941. This was the last time that we had this Jupiter-Uranus conjunction in Taurus. And this was on May 9th. Fascinating. I believe it was specifically on May 9th. The reason that's fascinating is because it's on Friday, Freya Day, day of Venus, Taurus ruled by Venus, tied to finance. She was born in the sea, current sea. So there's a lot going on there that could be decoded, but Jupiter-Uranus conjunction in Taurus. And then we had 1 day later a big war event occur. So here we are. Just yesterday, we had the Jupiter-Uranus conjunct in Taurus for the first time in 83 years. And we have this month's full moon 2 days out. Over here, we had this full moon 2 days out. Now, before we revisit this chart, it's important to note something that I've also brought up recently, which is 1941, right after this May 9th date, Jupiter-Uranus conjunct in Taurus. And we have a bombing in London, England, and Hamburg, Germany, making today technically the day after this same alignment. So keep that in mind. If something happens today regarding this war narrative, I mean, it could even happen while I'm filming this, who knows, then we have more proof this is a scripted reality. And we have a lot of time left in the day from the time I'm making today's video, so we'll see how this all goes down. I don't want there to be something to happen. It doesn't make me happy with this stuff. This is horrible that we're living through a similar timeline. I wish for everyone's safety. I don't want any horror and devastation to be put onto anyone, any community, regardless of their belief systems or truths. To me, it's sick, but it is the way this world works, sadly, until the state of consciousness shifts, which it clearly has not. That's what we're dealing with, right? So just to let you know where I stand on all of this, we're about halfway through today's episode, so let's keep things moving. I want to stay on track, but just bringing up that the last time we had this Jupiter-Uranus conjunct in Taurus, within 24 hours, we had a huge war update, and we are now in that same exact time frame, technically, if we were to just look at the astrological alignment. It's not the same exact setup regarding the astro chart, but there is similarities. And go check out the podcast that I did with Sama recently. He goes into the chart and kind of breaks down his take on all of this. Just one second. Okay. So when I check back in on the S&P on May 9th, 1941, you'll see about 6 days later, we had a little bit of a dip, and it was pretty much the lowest we went. And then about 17 days later, there was like a double bottom, micro double bottom, into like May 26th, which turned into a bullish V pattern, or W pattern, excuse me. Kind of had a W fake out into another W. Bullish breakout into June, July. So June, July ended up being really, really nicely. Really nice buyback, excuse me. Now, because it aligns so perfectly with the Year of the Dragon pullback time frame of late May, and we're talking about right here, into the 21st to 22nd week of the year that I told you to mark on your calendars, well, since it aligns so perfectly with that, it has me wondering if it was all about this rare astrological alignment, or is it just this particular time frame during certain years is coded to be a low point and a pivot for the market? Because regardless of this particular alignment, it was the same setup low of the Year of the Dragon and all of our other Year of the Dragons. It's like, unbelievable. So it's making me more confident, whether you are a believer in the astrology or believer in the Gematria, like wherever you stand on all of this, there is a clear cycle here. So this deeper part, the lowest part of the pullback was coincidentally May 1st. We do have the moons are slightly different, but look, the last low we got was on May 26th, and that's pretty much what it's like almost every single year. And we're like a month out from that right now. We also saw the same pattern of the bullish recovery where you see the highs in September. Like, how many times did I bring that up earlier? Into eclipse season. So this is really interesting, and it's making me feel that if there's a war update in September, like a big one, that might be a market top. It could very well be. Let me quickly check in, and I haven't gotten that far yet. I don't want to go too far into the future. Look at that, September 19th. National Socialists take Kyiv. Wow. Well, there's the Ukraine coming back into the story. We heard about what happened to the Russia-Ukraine invasion. So there it is. It's really, really interesting. Wow. 33,000 in Kyiv. And Russia comes back into the story. Wow, is this scripted? This was Rosh Hashanah, by the way, everyone. This was Hebrew New Year. Let's look what it would be for this year. Year of the Dragon. Operation Sea Lion. Mamma mia. So Britain's in the story. United States, something going on. Not as much. It's really this year that looked, this September, October timeframe, it started to get spicy. Oh, Pearl Harbor, was that? Okay, yeah. So that would make more sense for next year. Excuse me. That would make more sense for next year, not this year per se. I'm going to stick to my guns that I do really much feel like the crypto bull run will extend into late this year, December. at least November, December, and then potentially even alt season, like a true end of the alt season into Q1 of 2025. I'm sticking to that, and I'll give you guys more updates on that later. But for now, like while we're in this territory here in late April into transitioning into May, we're in like the buy the dip, last really solid buying opportunity moment for Bitcoin and for crypto. That's kind of what we need to focus on. And we'll get to the September, October timeframe later. But we see a pattern here with the month of September in all iterations of the Year of the Dragon analysis as well, and that's what matters. And what's interesting about September this year, let me pull this up. September 16th through 22nd, which will be the next partial lunar eclipse. It has this key 38 number, week 38. And since 24 is a very important number for this year, remember 24 is comprised of 3 8s. 888 is 24. We even have in Gematria gold equals 24. Or sorry, 38. Excuse me. Gold equals 38. 38, 3/8, that adds up to 24. Gold is tied to the sun. Sun is tied to the dragon. We're in the Year of the Dragon, and we've been getting so many fire rituals this year. I mean, it's unbelievable. We're only like a couple months into the Year of the Dragon. It's only 2.5 months, and we've already had so many of these events. But I just want to revisit the data point that I was talking about with 6 days after Jupiter-Uranus conjunction to 17 days after this, and this like micro double bottom vibe. Because if we were to take off of yesterday and add 6 days, that brings us to April 25th. So that could potentially be a little bit more to the downside for us. And then be open-minded to the 17th. And this is really fascinating because this is right around the May new moon. So you guys know that's typically a bullish time frame. But remember, if you look at this chart right here, this low that we had on May 26th was during a new moon. So obviously we're looking at a stock market indice, and we have been using our lunar phases for cryptocurrency. So there is a difference because obviously S&P 500 is 500 different companies. If you got into the astrology of them all, they would have all different birth charts. They would all be involved in different cities at different coordinates on the realm, like, so it's not the same as looking at like the Bitcoin astrology chart, or if you wanted to get into Satoshi's birth chart, whatever you want to do, or Vitalik Buterin's or the ETH chart. When you're getting into the astrology chart and you're seeing that kind of breakdown, it's a lot different than if we were to have an aggregate of stuff, for instance, with the S&P. So I hope that makes sense. Although we do tend to see big moves on new moons bullish, and we do tend to see big moves to the downside when there's full moons, I'm just letting you know that I find this fascinating that we got this correction into this particular new moon at that exact time frame. And May 7th would be 17 days after this Jupiter-Uranus conjunction. And that's right into our May 7th is right into our new moon. So that could very well be something to look out for. Could be interesting given the pattern that we saw of a bull trap into the first couple days of May. And we have this FOMC meeting on May 1st. And this is very experimental, but it's worth taking into consideration with how close we are to all of this. It's only a couple weeks from now. And with this May full moon being a month out, remember, this is not me telling you to wait to build positions. I said the same thing last week and all of last month and even the month before that. And I even took action last Saturday when we had that flash correction in the altcoin market. I made about 10 new investments in different positions, just building that venture capital bag. I wasn't waiting around for what would happen in May. And if we do get a bigger correction in May, then great. I'll continue to build my positions. But we already had many of the top altcoins down 30% from their microcycle tops. Even Ethereum had a full 30% correction from the microcycle top. Some coins were 50% down. So it just made sense to buy the fear. And let's just check in really quickly with Jupiter. I think this is a good example because I believe I caught the wick. I got in at about 77 cents on this. So I got in at 70. Yeah, well, okay. So I got in at 77 cents. I gave you guys a live update when I bought this thing. And now it's up, 50% since 1 week. It just made sense right there to buy that fear. This was an incredible correction to watch. Like from this microcycle top to this overall correction was almost 60%. Like, how could you not buy Jupiter in the year of Jupiter after a 60% correction off of rejections at the golden ratio? It was just, it had to be done. I would feel dumb to not do that play with how much I'm aware of the esoterica. So I'm not just like saying stuff, guys. Like there's a method to the madness. There's a reason to get in. And yeah, this was a beautiful oversold correction. I took advantage. A lot of the plays that I got into have had a nice bounce since. A lot of it is very speculative, by the way. Like, it's not huge positions in my portfolio. It's only about 2 to 3% on most of them. Some of them maybe 4%, but it's venture capital. This is the kind of stuff that goes up thousands of percent from where we started. When we go into a true alt season, you'll see stuff break from their prior all-time highs and go up 1,000%. Like, it's normal, actually. So this is my time right now to accumulate last minute, really speculative stuff, but in a conservative amount given my overall portfolio. And I'm not going to jump in on like something like Proppy that's been up like 500, 600% straight line breakout. I can find other opportunities in other places. And anyone who was involved in that Proppy play, awesome. You probably made out like a bandit. I'm not telling you to sell right now. Do what's best for you, If we were to see a crazy bigger correction with Proppy, then sure. But I'm not buying this. It's too straight line breakout for me. I can get into other things with a lot more upside potential from where I'm getting in today. If you're somebody who got in back a couple months ago, dope. The wolf pack is happy for you, always. Just remember, really, the key takeaway from what I'm saying right now is to not wait, all right? Don't keep waiting. That's going to mess a lot of people up. I'm only saying this so you can take the next couple weeks seriously by the week regarding any pullbacks. Like, look at this pullback here. Perfectly to this outside trend line. We'll get to this project a little bit later. But yeah, that type of dump, it just made sense. It was so quick and so ritualistic. And to me, that might really be as low as we get. So to just recap some of the dates we just discussed. We have this upcoming full moon in just a couple days. We have, let me check back in. We could see a continuation of bearish energy around this full moon up to 5 days after. That's another thing that I teach that we've talked about in the past. But we have to keep in mind the pattern of this micro bull trap into the start of May. And with the way the stock market has been selling off lately, it's moving a little too fast to the downside, and the daily chart is already approaching oversold in the S&P 500. So seeing a short-term bounce wouldn't be strange, and technically I'd look at the daily chart. Let me show you. I would look at the daily chart 200 moving average, which right now sits at about 4,700 points and 4,006. Yeah, let's just call it 4,700 points. That's where I would look to if we're going to have more continuation to the downside into that late May timeframe. A back test of those moving averages with an oversold daily RSI would be a buy. And of course, the main time frame to expect this is right around here into May 23rd, May 24th. We've saw May 26th is a common pattern. It even is on Bitcoin as well. Now let's kind of see what this all translates to for the crypto market. I think that's what you guys care about the most here. And to get started, let's take an average correction from all the indices from these microcycle tops to where we've corrected recently, the current lows. And I've decided to save you all time by calculating all of this in advance. So the Dow Jones has been 6%, S&P 6%, NASDAQ 8%, and the Russell 2000 9.5%. with an average of about 7% total correction across the indices so far. But for Bitcoin, it's been around 19% from the March 14th to April 19th halving. And for Ethereum, it's been 30%, as I mentioned earlier. So when comparing an average 6 to 8% correction for the traditional markets, whilst Bitcoin and the crypto market corrected over 20%, around 24% on average, during the same time. So if the S&P was to drop another 4% from where we are now into backtesting these indices, this could easily produce another shakeout for the crypto market. And this brings me to the Bitcoin halving in 2016. So I promised I would talk about that earlier, and let's review. So we're just going back to 2016 right over here. You could see this halving date is the blue line. We were incredibly bullish about 3 weeks before the halving, corrected into the halving. And then after the day of the halving, we had about 3 straight weeks of sideways before having a flash correction. So you can see after day 21, we started to unravel 4% to the downside, 3%, and then this day was an 11% correction. And off of those 3 days alone, that produced a 28% correction with a big tail to the downside. This was a liquidation ritual. And then we also traded sideways after this flash correction until the following solar eclipse, which was a calendar month before recovery. That would be approximately, if we were to measure the same time frame, around 55 days. Fascinating, since Satoshi Nakamoto in Gematria equals 55. Let me show you what that would translate to. 55 days from today would be June 13th. So imagine that happened. Imagine Bitcoin rose into like May 1st, whatever, and then what would 21 days be? Right there around May 10th, which is great. I'll touch on that in a second, but if we were to have that correction around then, maybe come to 55, 54, somewhere technical, and we'll get to that in a moment, and then bounce real quick and then just hold sideways around like 62, that would shake so many people out, man. You know how many bulls that were so stoked back here would become silent? It would be, for me, kind of hilarious. One second. Gotta sip some chai. Not to laugh at anyone's pain, but this isn't pain. But when you're getting this FOMO energy just because the market's bullish for 2 or 3 weeks off of a narrative, that's not healthy and that's not safe. And that's what sucks in a lot of good people who have no idea about investing. It sucks them into the top. And then when there is these bigger corrections, those same people panic sell. And it's really unhealthy to get caught up in the emotions of it all. But anyways, this past halving is really interesting. How we had 8 days of moving up, followed by about the same amount of time moving down, started to get really low volatility. And then after that 3-week period, just fell off this cliff. It was 3 devastating corrective days, and then it got bought back up really fast. And I've been telling you guys often, if we get any big corrections now, it's all going to get bought up fast. We're not in... I'll show you how bullish Bitcoin is. Look at the weekly chart. Look at the tails on these candles. We corrected a ton here, but we just get bought right back up. That's 10% off the lows over here. This is 7% off the lows over here. This is wild to watch. Like, look at what we're doing right now today. We got 8% on the last week. Every time Bitcoin corrects, we just get bought right back up. This is a bull run. This is crazy to watch. It's all just liquidating weak hands, and then the same institutional players are obviously buying. And then we have just this chop that we've been experiencing lately now going on 40-something days. This type of chop, it becomes boredom, and retail doesn't like boredom. Retail loves excitement. But wolves, we buy the blood, we buy the boredom. It's really how you stay profitable in this game. So this correction actually came down into a technical target of the 200 moving average. It swiped all the way down below the 200 SMA, but you look, we got bought back above this 200 EMA, and then the following day we had one quick test on the 200 EMA, and that was probably the last time we saw it that was the last time we saw it until much later in the cycle. But even here in late March, we saw a back test on the 200 EMA. So if we go to today and see where this 200 EMA is sitting, that's crazy. It's literally at 51. So it's like perfectly in the range of this what I've been showing you guys week after week after week. You know how many times I've shown you this chart and it says previous trading range right here? Well, the low of that previous trading range is 50,500. And you could see right here that this 200 EMA, as we speak, is at 50,700. It's like right there. And it's approaching above the bottom supports, which would also be a backtest of the 786. Yeah, it would be a backtest of the top of the golden pocket. That would be one of the healthiest corrections for Bitcoin right now. But I think it would be a daily, like it would be bought immediately. And with the way Bitcoin is, it would probably touch there and then be bought back to like 57K in the same day. Like something that insane. You would see that if we, I'm not saying we will get it, but if we were to, I bet it'll be bought back to like right 58. Like people would be shitting themselves. They would have no idea, what did I just watch? So it would be, and all it takes is a little thing. This whole market right now is on glass toothpicks. It's really unstable. And with any war updates, again, sadly, this will make the market dance. So get ready. But I brought up this idea of 3 weeks because 3 weeks after the last halving, let me just quickly show this one last time. 3 weeks after the halving, we had this big correction. Now, 3 weeks after our recent halving, let me show you where that puts us. Would be May 10th. Remember, I brought up May 10th twice. Not only in 1941 when we had the Jupiter-Uranus conjunction in Taurus, but also in 1940, which was the year of the dragon. We had it both times. Big events in this war narrative on the same date. All right. Now, also May 10th coming up this month, which I just showed you is 3 weeks after the recent Bitcoin halving, which is insane how it aligns with the Jupiter-Uranus conjunction too, considering Bitcoin is Jupiter, the son of Saturn. So I'll be decoding that more when I do my crypto decoding blueprint, which I'm working on right now. But in the meantime, we have this May 10th date in both of those key years that we've talked about, not only from the cyclicality of the Chinese zodiac, but also adding in this extra element of the astrology then. And that would be the 83rd year since the last time we had this Jupiter-Uranus conjunction. 83, 8 times 3 is 24. And we're talking about Jupiter. The Jupiter symbol is the 24. This is insane if that was to be the case. Now, one thing that I recently brought up, but I find this to be incredibly synchronized, and then we'll finish off with our TA today. We had the Bitcoin all-time high, highest daily close on March 13th. Okay, so March 13th, as you can see here, it is the 73rd day of the year. And this was the only day ever that Bitcoin closed above 73,000. We closed literally at $73,084, barely. And it's the only day that we've ever closed at 73K. It happened to be on the 73rd day. Now, if you were to take 37 days after that, you would see where that puts us is literally the Bitcoin halving. Mind-boggling. I don't know how the fuck they coded this, bro. Like, it's rigged. It's like knowing what you guys know here is a gift. I mean, I am starting to become so mind blown by it all that it's making me want to almost only play off of the esoteric stuff and start to like take the TA and a lot of the other things and just mute it all together. Like, I love the TA and it's been very helpful. But when you see synchronism like this, it's like, damn, wow. You know, like really wow. It's making me a lot more confident in the esoterica. That's what I love what we're doing here. It's very, very unique, very special. But 73rd day of the year, it's the only day that Bitcoin closed at 73K. The mirror of 73 is 37. 37 days later, we have the Bitcoin halving. Wild. So it made me think, let's play around with this. What's 73 days after Bitcoin closed the 73rd day of the year at 73K? And it is May 25th. right in the time frame of the May full moon, which I've been telling you guys about the whole podcast. So it's insane how synchronized this is. Now, I'm not sure if the traditional markets can bring Bitcoin down to that exact date at that exact time because crypto tends to move a little faster. But if that was to be the case, I would assume that has to be a significant daily close. So it would have to probably be either a new daily close low, or this could even be the date that Bitcoin breaks all-time highs again, depending on how the energy moves, like how quick and how swift it moves. But I'm going to tell you my take on this. Because we have so much data that points us to late May, around the May full moon, being lows, as we see here in the Jupiter-Uranus conjunction of 1941, we can see May 26th. The prior year, we see right here in June, all throughout the end of May, we're low into June 10th. It's just so many iterations show me that we're in bearish energy. If the FOMC meeting is going to create some bearish, vibes, I expect it to slide then. And that's typically the month that we do it. As I've said many, many times, you can see this big red candle in the presidential election years. In all years since 1896? Fuck. That's the month to buy the dip. So let's get into Bitcoin because we need to finish off our traditional TA and the top 3 projects and then move on to some of these altcoins. We have Bitcoin on the 2-week chart. You guys know that I'm a big macro analyst. I like to look at the 2-week, the monthly, the bi-monthly, the quarterly, etc. I love that type of data. It's a lot better to zoom out, especially in crypto where we're trading 24/7, 365. It's very acidic. It's lots of volatility, and it can make you kind of lose sight of what's happening here. Well, this bi-weekly close is coming in tonight. All right. It will come in after the CME opens. And given that there will be about a $1,000 gap between where we're at with the spot price and the CME chart, if we're going to fill that gap before market opens tomorrow, that's likely going to fill during our current trading week, which means that if we were to close below 64, that would be very bearish looking. We were holding this support here without getting that bearish engulfing candle. We've just been doing like really well off of all of these buybacks for Bitcoin. I talked about it before where we were measuring the tails of every weekly candle, and it's just been wild. And this week is seemingly no different. But if we were to close this current week, I think below 65, that would not look so great. This closure over here was 69,000. This closure over here was 67,000. And over here, we closed at 69,000. This is a clear distributional top. This would signal more downside in my opinion. And where I would anticipate it to would at least be the bi-weekly 8 simple moving average. So this aligns very nicely with this chart over here where you see this dotted line across the parallel channel. It's at 56,000. Over here, we could see the 8 simple moving average, 56,000. Also, we see the 2-day 55 simple moving average. It's at the same level. Now, why is that so significant? Because when we pull back to this time frame, you have the Bitcoin ETF announced on this day, big fake out bull trap. And we got a correction straight into the 55 simple moving average on the 2-day. This is a very important moving average. Right over here, this was the Silicon Valley Bank collapse, March 10th, 2023. We tested on the 55 simple moving average on the 2-day chart. This kind of makes me feel like this is it. If we were to get a bigger pullback right now, it would be to that level, technically. And unless it's something like crazy big development in war, it's likely to just be holding on that level. And then let's look at the weekly chart so we could see where the 21 EMA is. The 21 EMA is also at 55,000. So on this weekly close, it's going to push up to about 55,800, 55,500, and that's right there around 56,000. It's the same. So I know we're eking up more and more and more as we speak, but it's a bull run. And that's exactly why I took advantage of last week's pullback on Saturday. So we have here the 111-day moving average. It's at 56,000. That's the key level. And I'm glad that I shared this chart with you so far in advance, marking off this particular area and creating this parallel channel, because it's a thin air kind of move between this closure and this closure. We just swiped straight from 52 to 62. Bitcoin literally went from 51,000 to 61,000 in just a couple days. So at least coming and back testing the middle of that range would make sense. It would be healthy too, and I think that would reset momentum for the most part. But look at this. Last week, we did technically close below the weekly 8 simple moving average. And the last time we did that, we did swipe below the 13 EMA, which is what we've done this time. This has been an incredible buyback, like wild. We just keep doing this. We're bouncing, and all of this bearish energy is getting liquidated again. And I bet there was a lot of shorts that piled in around the halving, and the market makers just squeezing them right now. So this kind of looks like a short squeeze in my opinion. But anyways, closing below this weekly 13 moving average would be a very big sign of weakness. But we're not there yet. We're doing good. Let's look at the 5-day. It's been a minute. Okay, we got one coming up on Thursday. That's fine. We're holding this 13 5-day moving average. We did get a little bit of a back test here on the 21, but we've been very, very bullish since. Now we're keeling over and we're starting to show. On the 5-day, it's clear that we're beginning to form a distributional top, which is bearish. And when I say bearish, I'm talking about the micro. I'm not talking about the big picture. Over here, same kind of story on the 3-day, but no 3-day closes soon. And we have one tonight on the 2-day. So yeah, we're getting this cluster over here of the 8 simple, 13 EMA, and 21 EMA. If we were to get lower than this 21 EMA tonight, so below 65,000 effectively, which would align with the CME chart, especially if we were to close this candle red, and that would be a big push down. I don't know if we could, well, it's crypto, right? 3% down would be nothing. But yeah, if we can get a 3% push down, that would definitely signal a problem. Now, I'm not trying to be a bear here, you know, like there's always an upside move to consider, but we're at what, like 50 days now? We're over 50 days of being in this trapped range between 60 and 70. So until we start to actually close back above 72, 71 is our resistance, and I showed it here very nicely. So 71 is our key resistance. If I put it on like a 12-hour chart, it looks much cleaner. Let me turn off these moving averages, and you see what's up. All right. So you see our 1-month support, gorgeous back test. We held that very nicely on all of these 12-hour closures. Now we're up to this red dotted line in the middle, which would effectively be the heart line. We're getting a lot of resistance there, as we had a little bounce here back in early April before the bull trap fake out, which was on the solar eclipse. Since we've corrected down to the support, this is a very powerful support at 61K. Which still stands on all of my prior analysis when I told you that until we're closing dailies below 61, this is a support line. So closing daily below 61 is the key trigger to see further continuation to the downside. But in the meantime, we got to look at how the CME opens. Daily chart, we have a wolf cross. We got a lot of, yeah, we are having all of our moving averages flip more bearish on the shorter time frames. The CME is around 64,003. So yeah, we're about $1,000 above that as we speak. Obviously there's going to be some slippage with premium, but yeah, there's going to be a gap. In plain English, there's going to be a gap. All right, ETH is now bottoming out but being bought back to these prior supports, and if we do see rejections here at 3,200, that would be prior support is now flipping into a resistance. That would be bearish in the short term. But let's look at the weekly. Oh wow, we doji it on the weekly, that'd be wild. But if we get brought below 3,140, that would be bad. That would be further continuation of the downside, and I think we would swipe down to this sub 3,000 level pretty quickly. I don't know if we can make it all the way down to 2,700 again. If we do, that would be the craziest buying opportunity for altcoins, so just keep that in mind. But at this time, yeah, there's pretty much thin air. Yeah, this is not good. Okay, so you see over here, this was your one like big key level to anticipate further continuation for ETH, and because we got slightly above that and rejected, and now we're starting to close below that level, everything after here was cascading into hell. So there's no strength. And the next big area of strength is right here where I'm drawing my horizontal line. That's at 25. It's very clear. Once you get past this level, you have all this support. Then you have a break of support, and that was where it fell off. And if you go to where we were recently, we got bought back, got some rejections, one back test, and since we've broke out, it's been very, very bullish. But since we broke out, we haven't back tested it. So if I was to play it off of like the crypto bull run vibe, it would be more around like 26. So if we were to get that low, that would be madness. I don't think we got an almost 40% correction on ETH in the last bull run at this stage. No, we didn't. We just bowled through it. No, what, 15%? Oh, wow. Okay, 35%. It doesn't look like that much, but it is. And this shit's silly. I don't know if I would. Whew. Oh my God, imagine that. Imagine that. People would be, yeah, there'd be suicides. Crypto's wild, guys. Like, I've been through this before. When you see these 50% mid-cycle corrections, there's people lose it. So the wolf pack, we're just chilling. It's like crypto probably causes more mental health problems than it does make people rich. Not here though. But yeah, I think that this full 30% pullback so far was really nice. It was a big gift for speculating on altcoins. But if Bitcoin does the deeper correction back to 61, and keep this in mind because of where Bitcoin dominance is right now, we can see this start to break below 2,800. Even with Bitcoin just retesting back at the prior support right here at 61, because Bitcoin has strength right now. We're getting over to XRP. XRP is a pretty decent buyback off of all of this, but nothing to really write home about. We're stuck in the support of a horizontal trading range that's been going on for a long time now. But this is actually what XRP was doing back in 2017 over here. It's the same shit. It looked hella bearish, and it was really not looking so great until out of nowhere it just popped. So yeah, you could see over here, especially like after this mid-April, late April timeframe is where we made our first big surge after this kind of recovery surge. This is just too hard to analyze because it was too much movement in such a short amount of time. Whilst here, it was a little bit more reasonable, you know? Still a 10x in 30 days is fucking crazy. I don't know if we could see that with XRP this time, but you could see where it went up was to May 18th. That is not in alignment with what we're getting right now with our bearish dates. But I've been saying that we could very well get a isolated event for XRP because of what's going on with this case. Now, I'm hearing talk of this case going to the Supreme Court. So if it goes to the Supreme Court, this shit will drag on forever. And that's really like, I can't speculate on that right now. The only thing that I could add is that I know that XRP did a 10x in the time where Bitcoin was breaking out into price discovery, and Bitcoin is not in price discovery right now. So if it could pull off 1,000% move from here to here, so the start of the case of the SEC lawsuit to this alt season, and then if it's able to pull off 1,000% move from here to here, then we know that it could do this. Like, we know, without really much besides a Bitcoin price discovery surge or expansion. We get the same kind of vibe over here. So it's hard to measure off of wherever we would want to take that, but I think if we were to do it off of this level right there, yeah, this puts us into about $5 to $6, and that would be life-changing for a lot of people because some people have been accumulating this thing for a long time, but it doesn't quite get to those levels that I've talked about for the end of this cycle, which could be effectively Q1 of 2025 for the altcoins. So that would be before April of 2025, and that for me is looking somewhere between a $15 to $25 XRP. But if we were to get this move to happen fast, like a sharp move, build some sideways chop like we did over here with a big correction in the middle, for instance, if we were to surge straight to like 5 and then come back to like 2, that would shake out so many investors. And then if we were to hold sideways for an additional 200 days, followed by another surge to the upside, it could complete that move that I just said. That initial move up to 5, pull back to 2, then just surge up to 15 to 24-ish And I'll be making more about that in the future. But for now, while XRP is only 50 cents, we don't want to be speaking in fairy tale terms. Like, we have to keep it realistic here. So with this pullback that we've gotten recently, we're still holding the structure, but it's just another Bard head. It keeps doing these small distributional tops as it's building higher lows. So yeah, I mean, there's not too much to update here. I'm gonna have to just move on. But again, I'm still staying firm on the idea that there is a play here, regardless if there's any update with the XRP case. It's just unfortunate that they continue to keep moving this and dragging this through. That's just part of the legal system. And it's also what I must say that's also important, I brought this up in the past, it has a lot to do with the investors. XRP investors are clearly not in this thing, as they should. Because even if there was this SEC case, it's not holding investors back from buying it. And its market goes up because people buy. This thing is being panic sold, and you could even see over here, this huge shakeout is leverage, which is surprising that there's so many people playing with leverage on XRP, but needless to say, yeah, there needs to be more investors in this thing. And I think we're also watching the capitulation of influencers. Like the influencers, because of where XRP is at versus where some other things are at, they're losing hope. That's pretty obvious to me. I'm not going to call out any names. This isn't to create division, but it's just when the only thing that was really helping the XRP price action was the influencers and like the community behind it, and then that community starting to go away, it's kind of getting hexed. This has started to go down with hex too. And it's not just in the hex chart, the E hex chart, where you can see this thing's just going down and down and down forever. It's also in the P hex chart. I could quickly check in and I could show you that. So we don't want this to all happen again, but they've just gotten into, the SEC case. They've just gotten into a lawsuit with the SEC. Yeah, dude, back at it. Just right back down to the support. So this was a bull trap. It's been 67% correction off of this. Oof, my God, I haven't checked in on this. See, there's no community behind this anymore. It's starting to unravel. And that I'm not talking shit right now. This is the facts in the chart. I'm not trying to hurt anyone's feelings here. Like, this is not good. This is not good. This was at its highest back in May of last year. It's about to be May of this year. And off of that move, where this thing is down 70%. And it's been chopping in a horizontal trading range since. There's no community behind this thing anymore. They fled, and it's obvious. They fled. This thing is down 99.99%. So we need a community behind these things to get out of the talons of the apex predator. The XRP community needs to wake up to this, and the Hex community. I want all these people to eventually wake up from being a one coiner. And again, I'm not trying to talk shit here. Like, it's just things that nobody else wants to say. We need people to invest in this stuff for it to have price appreciation. Now, we're moving on to Nexera Foundation. This is something that I was unable to cover last week. Just some issues with finding charts because this thing updated from one project to another. I forgot the exact name. But anyways, I decided to do this because of some popular demand, and we have NXRA chart going back to March 2023. Swing high to swing low here on the fib. We're going to double click the fib and make sure it's on fib levels based on log scale. It is. We're on a logarithmic chart. This thing has had an incredible eclipse to eclipse move. So look, this is the last solar eclipse in October 14th. This is what I teach, by the way. So just so you can see the madness behind this. And this is April 8th. This thing went up 400% from that eclipse to that eclipse. And as you can see, that was about as low as it got on this project. So the eclipses are something to keep in mind for this because it is clear that it's part of the movement and energy of this particular coin. But it topped out in late March, right around when Bitcoin topped out. So it's very much following the movement of Ethereum. Keep that in mind too. when you're just determining energy here. And it topped out at, where do we get 28? The next era. So I'm looking for this just to show you a little bit of the methodology here. We're looking for either doubles off the key numbers or division of the key numbers. So we have this 28 times 2 giving you the 56. That's one thing to think about. Getting this 57, it's pretty close. This isn't to find this initial top. This is more about just understanding some of the numbers behind this thing to determine where it's likely to go in the future. And this 21 tied to Saturn is pretty big. Got this 52 tied to cryptocurrency. Also this 56, like BTC has the 56 and 36 in Bitcoin. 23 in Bitcoin. And the same cipher. Okay. Yeah, this is going to be probably moving on with Bitcoin for the rest of the cycle. And it's not only obvious in the movement, it's also obvious in the gematria. So I can't do too much with this chart, so I'm going to try to play around with it a little bit and see what I can get. First, I'm going to double click this. I'm going to turn this onto linear, and I'm going to see where this 4236 is. So it's about 34. I'm going to mark that off. Also, what I would like to do is I'm going to mark right here. I'm going to pull a fib. I'm going to double click that. I'm going to turn this on, and it's going to show me a downside level. Okay, so if this thing is to start falling rapidly to the downside any further than where it is now, it would probably be somewhere around 10 cents. Now that's very much in alignment with this right here. And now I'm going to delete all the fibs. And I'm going to show you why this matters. First cycle peak, all of this support before the bounce. So if this is to retest, I would be considering 11 cents, 11 to 12. Doesn't have to go all the way back there, and that would be a devastating correction. That would be a 60% move. I guess that's not that weird for something that's already broken above the 1618. But then this would be the next higher target that I would keep in mind. And I want to look at the 555 because that's a new fib that I've been playing around with. It's at 42. $21 times 2. 24, mirror 42. This isn't lucrative enough for me to get in. I wouldn't touch it. I'm just going to be honest. It's too high. So after looking at this very quickly, I don't care. Unless I got in back here. But yeah, this thing is overheated. Yeah, I'm just being honest. But now I'm going to be very clear, just the technical analyst, and I'm not going to put my opinion. We have the fib pulled originally from the swing high to swing low. We got above the golden pocket after getting all this resistance on it. We shot up very quickly to this 3618, and now we're back testing this 1618. We're back testing a prior resistance. This is a very key line when you want to anticipate more continuation up to some higher targets. All coins do like to make it all the way up to the 6 spot. So in this case, that would be somewhere around 40 cents. But where we're at now versus where that would be going is 140%. I can do that in my sleep with so many other altcoins. I could do 1,000, 2,000% other altcoins. This to me is not the move right now. Now, the sad part about all of this is that this prior chart of what this coin used to be, it will not synchronize with this. So I can't just do such a thing. That's why I skipped it last week, but I decided this week to just do it because I know it's popular. And I'm not trying to discourage people. If you want to get in this project because you have an investment thesis based around it, then do it. But for me, this is not a go. This is nothing. My Jupe play will far outextend this, and even that is already pretty high. But now, if this shit was to come back to 10 or 11 cents, then I might change my tune on how I would look at it, but I still probably wouldn't invest in it because it's too much venture capital for me at this point. I already have enough plays. And that's, by the way, I want to remind people, the Red Pill podcast is not about what WatersAbove wants to do. I'm just being transparent. I'm clear. I'm letting you know why I feel the way that I feel about certain projects. I get the questions asked a lot. I'm not going to call this a shit coin. It's like its chart is fine. I just don't want to get involved in something that's already been getting close to the 4236. It's not the way to go. And it's already had a nice pullback of 45%. I like to buy stuff at the 382 or the 236. I like to buy stuff here, not here. And this gave you a pretty solid horizontal trading range before it popped. It was sideways for 200 something days, with a lot of that time being below this 0.382 level. So great. If you were involved in it back then, great. For right now, this doesn't have, I think, too much more to go. I do think 42 cents is an area of interest. And then I would have to check in on some more of like the other things, but it's just not interesting enough to me. I do see hexagon symbolism that's going to be tied to Saturn. Yeah, I mean, this could very well do the 42 cent level. Saturn, 42. Okay, keep it moving. Cool looking project. Dent. All right, so now we're talking. I get excited when I'm looking at charts like this. C19 crash. We're going to go off this level right here and show how much progress we made. That's 1,300%. So if you bought this shit back in the Bitcoin halving, the last Bitcoin halving, you were up 600%. So it's like about being the same in Bitcoin in terms of gains. It's not that impressive, but it's still above the C19 levels, whilst we have a lot of altcoins that are still trading as low as that. That's not good. So this one's done 1,000% since. That I like to see. Here was your initial SOS and backup phase. If I take off this horizontal level here and I look at what the bull run was, it was a 10,000% move. So we know this one has juice to the upside, right? Now, the next thing I'm going to look at, and you're going to start seeing me do TA like this moving forward because of where we're at in this cycle right now. We just back tested the 236. Buy the dip. I'm just fucking around, but like that is glorious. Look, let me show you. Rejection. Bought back. That is it. And if we look at how much room there is to the upside, 1,500% to just retest this blow off top. So if we just conservatively look to the 888, like for instance, or if we were to just take off of this level right here, we got 500%. So I don't even need a bank on price discovery, and I'm already outdoing the performance of Hope on the last project that we were looking at. Remember, that thing only had about 200% up, and it was already getting into the 4236. You know what I'm saying? So it's a different vibe. Now, if this thing right now was to mimic what that last coin did from where it's at right now, it would be like, yeah, it's not even fair, bro. Sorry. It would be going up to here, 7 cents. That would be 5,000%. I don't know if this coin could do that, by the way. I'm just giving you the concept to consider. Why this is more exciting than something that's already in price discovery. Something that's down a lot, but it has been effectively at a resistance for 600 days, and it's just started to recently break above that resistance, and now it's back testing that prior resistance as a new support. You see the method to my madness? All right. So unless this thing has a fucking spring, which would be a shitting the bed down to 0.004 cents, which is why those two lines are down there from the last time I covered this, then this is effectively in the process of heading up to an SOS. And that would be somewhere in the golden pocket territory. That's why earlier I brought up this idea of like a 500% move, because you have this two tests creating this M pattern, which broke down bearish, And just from where we are right now to there is 500%. That's amazing, you know, compared to what people do in the stock market, for instance. The stock market, by the way, is only up 50% from the end of the Shemitah, which was 2022. Today is 2 years later almost. This thing has 500% up to just get within prior all-time highs. Teaches you kind of the way I'm looking at this. Now, symbolically, I think we're also getting a hexagon with this. We're also getting black and white symbolism. That's probably a reason why it's down. Yeah, Saturn energy. So yeah, I would keep that in mind. When we start moving deeper into the year, this thing is probably going to lift. Around Saturnalia. What's going on back here? Right after that time frame. Whew, my God. This thing went up like 10,000% in a straight line. All right, interesting project, very cool. Back test of a key level that I think needed to be broken out of, and it's healthy. If it starts closing below this level right here, wherever that is, 0009, that would not look so good. But until then, this is a nice bounce. Illuvium. Okay, similar kind of crazy chart. We have below the two, well, same bounce too. Look at that. All right, what a fucking bear market though. God damn it. 98% straight line to Hades. Didn't even get a kiss from Persephone. Just yeah. Just all Indian food and no toilet paper. Okay, well, we're back at $100 on this cute project, and it's now up 100 or so percent from the October solar eclipse to the recent eclipse. Right below 382, that's weak. So this buyback was very weak. We don't really, yeah, that's, and it's not really catching up too much. So also similar to the last project, it got this twin tower symbolism, this kind of tuning fork, Anubis ears vibe. Yeah, purple symbolism too. Yeah, I don't really have too much different to say than what I shared in the last project. It's kind of similar, except it doesn't have prior, at least not what I have, the prior chart history. But if you guys have access to prior chart history and it was around, and the C19 levels are lower than $30, then that's fine. If the C19 levels are where we're at now, bad, because that means this thing broke lower. But it doesn't really matter as much. A 98% correction is a shit coin. Anything that does this kind of stuff is not like huge positions in your portfolio. You'd be very cautious, overly speculating. And given the way that Bitcoin's been bought back up recently, Bitcoin's outperforming this project. So Bitcoin, the highest market cap project, is outperforming this. Again, not looking so great. But if we were to retest prior all-time highs, we're looking at almost 2,000% move. If this thing was to go to this 702 level, which is around where it started to break down, that's also 500%. Just keep that in mind. It's looking decent. I wouldn't get too happy about this one though, just because of the performance. Yeah. Let's move on. Just, it's very similar TA to the last project, to be honest. Now we're getting to Velo. Okay. My God, what happened here? Yes, 99.9%. Holy. Wash them out. Wash them out. Look at this. Imagine holding through this. God damn. This was a year of being at 60 cents, and then it dropped to below a penny. This is not good, dude. All right. Where are we at now? Let's get back to reality. We had breaking below this yellow line, and now recently we're breaking above. Yay. 2 years. Yeah, this is awful. I know that this has done a 10x over the last year, but like, dude, really, really rough. Okay, positivity. It's been doing great lately ever since the last solar eclipse. If you bought this thing, you probably feel like a genius right now. It's done incredibly well. But yeah, this is a sketchy area. So I have this level marked out, this 1618. I would keep that in mind. That could be the next impulse. We have a lot going on right here at 4 cents. Let me show you. Okay, so we have this here breaking below and then getting this resistance at June is what started this sky, this moon falling from the sky. Yeah, so keep that level in mind. If it gravitates back up to that, great. But it's really tough to speculate on this thing returning back to all-time highs. It used to be $1.90 and it dropped to below a fraction of a penny. I don't know if I would bank on this. This is a real rough. Okay, I have to wrap up this podcast soon. But yeah, I mean, if this thing even gets back into the golden pocket, it's like 1,000 to 2,000%. So have fun with this. Yeah, this is bad. Yeah, I'm sorry. It's not, it's too, you have to time this right and you have to de-risk it. Like, you cannot just hope for the best on something like this. Here's a good example. Look at December 2022. It does a 1,300% move, and then it also comes back down 90% after that. That's not a good project. That's quick speculation, flush. And what we're watching right now is no different. So yeah, this is a key level though. Keep this in mind for anyone who's invested in this. And if you got in this thing back in October, September, August of last year, then congratulations. This is great. If it's at the 2 to 3% of your portfolio range, don't worry. Just hodl it till the end of the alt season. And if you're in a huge position on this and you've already made a ton of money, then don't be stupid. De-risk. Don't be greedy. At key levels. So it'd be somewhere between 0.3 and 3 to 5 cents. Now the great news is if it could break 6 cents, it doesn't really have much till 30 cents. But this is like doing analysis on the Terra Luna classic chart. Like, it lost all of its value down to fractions of a penny, and then it's just started to break out of a horizontal trading range that formed 2 years ago, So of course it has big opportunity to the upside because it lost everything. This doesn't make me feel happy. But yeah, if you're making money in that thing, great. Okay, now we have EGLD Multiverse. I decided to get involved in this for several reasons. One, this is the C19 crash, and this thing is up 5,000% from the C19 crash. So it had an incredible bull run. I'm not anticipating this thing to have a crazy price discovery move like here with 60,000%, but that's one big green check mark for me. This is your backup phase. Just from the backup phase, this thing is up currently 500%, so that's looking amazing. So if you bought this thing when Bitcoin was at $3,000 back in the C19 crash, you would be up 2,000% today. You didn't even need to sell the bull run. You could still be in the bear market lows and be up 2,000%. That's insane. Compare that to what ETH has done. Compare that to what XRP has done. Now, I'm not sure about all my feelings on this project. Again, I'm treating it as venture capital. So what happens, happens. If it goes to zero, I don't care because I didn't put enough in it to be worried. But with this recent backtest of this broadening megaphone type deal, this descending broadening pattern, it makes sense to get in. And it's below the 236, which is weak, by the way. This is not looking good. I don't love when I see stuff like this. It can't even hold the 236. But yeah, I mean, to me, it's just so much opportunity on a venture capital play that I'm willing to take the chance. And we got about a 1,000% move to retesting all-time highs. We got about 600%-ish, 500% move to retesting where it started to show some weakness during this blow off top phase, and if it goes into price discovery. Even just the logarithm or the linear chart 1618 from where we're at now, we're looking at about 2,000%. So that's what I look for on a lot of plays. If I can get that 1618 somewhere around that 2,000% mark, that's amazing. Now, if this thing could really go for the gold and make it up to this 4236 level, we're talking about a 5,000% move. That'd be crazy. And that's around $2,400. What's sick about $2,400 is this has X symbolism. X is the 24th letter. Could be something to keep in mind. Also wild how the all-time high on this was the 505 and the 55. So that's going to be tied back to Bitcoin and Satoshi Nakamoto. And we know Satoshi has the 24, also the 44, 2 4s. So we get a lot of 42 and 24 with Satoshi Nakamoto. Gives you 181. That's the 42nd prime number. And then you have the mirror of 42 is 24, and that's 89 is the 24th prime number. X symbolism, 24, everything going for Bitcoin and Satoshi this year in the 49th year of age, 7 sevens. Beautiful. So yeah, this will be interesting to see how this all shakes out. Let me add in my 555. Make it blue, make it bright. All right. And then we have this key level over here of the 702 fib. So if it could only go back there, we have this rejections, backup phase, trying to hold, rejection, rejection, dump. That's the most important key level, is $212. And I think I got in at 40. So just right there is still about 400%. I'm fine with that, even if it only does that. Now we'll get to that later when we see it, the true alt season breakout, but that's kind of thin air between here and all-time high. We're talking about very few trading days, and we've seen what this project has done before. When it gets bullish, it just goes crazy. So I speculated on this for several reasons. One, insane performance since this big C19 ritual. Performance is great from the last big backup phase. This bear market has been going on for a long time for this project. We're looking at about 2 years. We have these double tests at the 382. We've broke below the 236. To me, this is a very lucrative discount, and it's about the middle of the bear market, about as low as it can go. So we see this apex right here also coming in on June. I'm just having fun with this right now. 3 touch points at the bottom here, all these touch points here. This could very well be this last kind of, we're about done with this pattern anyways. So yeah, I don't know if it could go much lower than 30 is kind of what I'm trying to say. Even if we were to get a bigger correction on Bitcoin, it would probably just fill some of this gap or some of this wick to the downside. And yeah, I might do a second buy, but I really don't care enough. It's too small of my portfolio. And that's what venture capital is. You want to keep it somewhere between that 1%, 2%, 3%. When you start getting over 5%, yeah, you're putting a little bit more heavy buys in. Of course, unless you have a super small portfolio, and that's fine. Everyone's in a different place with that kind of stuff. Okay. I think we need to wrap this one up. We have talked so much about this particular time frame, and here we are. We had this Jupiter-Uranus conjunction. We're living through it. Take note of some of the things we discussed today and about this next week or so moving into the monthly close. I will have, obviously, next week a new red pill coming out, and we'll make sure to recap any of the stuff that we didn't cover today, but I tried to give you as much as possible to prepare you for what could be going on after this particular weekly open, and even as far out as late May. So we're very prepared for all of this. I hope you guys enjoyed today's podcast, and I'm wishing you all a beautiful rest of your weekend in the Matrix. Much love.